JJ, let's talk about this. What Tepper was laying out yesterday was pretty serious. This idea that he doesn't really see anywhere to go. He's going to be short on credit, short on treasuries, and short on equities, too. And that's a pretty unusual position. Not all retail investors want to go short. So if that's the case, if you don't want to go short, you're worried about what next year is bringing, where do you go?
Yeah, and, he says he's leaning short. Well, most retail traders have to lean long, Becky, just if you look at their longer-term investments in IRAs, et cetera. So what's really been interesting to me is kind of watching and over the last few months what's happened. And, what we saw, if I go year over year, last year we still saw some individual names being purchased, et cetera. What we're seeing right now is the ETFs that are based on indices, so primarily spiders and QQQs, and index, both options and underlyings themselves, have gone from 25% of our trading a year ago to almost 40% right now. And so it's not only the overall market that's confusing, but the individual stocks have also been a place that's really been difficult for people to be, and there's no one name that leaps out. You guys have talked a lot about Tesla, obviously, over the last few weeks. And to me, one of the things about Tesla is that it's always been a confidence barometer for retail. So to see Tesla really getting beaten up here as we head into the end of the year, I think has many people scratching their heads as to where do I turn next? And so, that's why I think at least they're like, okay, and an index overall, I feel a bit more comfortable because even though the markets are struggling right now, I don't have sort of that idiosyncratic risk of one stock with earnings or bad news or something like that. But it really is a tough time for people to kind of figure out what the next step is.
So why wouldn't the alternative be cash? I mean, that's what Tepper recommended when I asked how you play along at home. If you think that there's going to be volatility and things are going to come down, maybe just save up, save your cash for a rainy day.
You know what, Becky? And one of the things that I think that, when we talk to retail traders, we talk to them about trading a bit more like a professional mind thought. And so one of the things with that I think people really do have to consider is sort of scaling in, if you will. And I think that one of the bad habits that unfortunately retail has gotten over the years is to be a bit all or none rather than thinking in a scaled way. So what you're saying about cash absolutely can make sense for most people. At least, maybe they invest a bit over the next few months for sort of their longer term stuff. For those retail traders who are more trading biased, if you will, this has also been a bit of a confusing time. We talk about the VIX a lot when I'm on here. Normally, when we see markets with weakness that we're seeing right now, you see the VIX start to go up, volatility increase. Well, we're not really seeing, although it was up yesterday about 9%, we're coming from a pretty low level from where we've been recently. And so this sell-off, if you will, gradual over the last few weeks, really hasn't been accompanied by an explosion in volatility. So that's also a little bit more difficult, although I will say we are starting to see a lot more, we're continuing to see strong options activity throughout the market, through our clients, as people are looking for different ways to hedge themselves.
What happens over the holidays? I know that volume drops significantly on the exchanges. What about the retail investor? Are they more or less likely to be making moves over the next week or two?
Well, I think this year you may see some people doing more tax loss harvesting than perhaps you've seen in the last few years and rolling out their positions a bit more. So I would expect that you will see maybe a bit more retail activity overall than you would normally see as a percentage of business this time of year, strictly for those reasons. And, more of tax moves, quote unquote, if you will, rather than necessarily trading and saying I have to be involved for Q1. That said, I think people, to your point earlier about being in cash, are also going to start looking at the end of the year and say, what stocks have just gotten decimated that I think might still be good going forward. We saw a day like yesterday where I will say for the first time in a while, we saw some bottom picking, if you will, some people coming in to buy Tesla after that big down move, some people coming in to buy Amazon and Apple after, these stocks have gotten beaten up pretty good overall. And again, those have been a bit of the confidence barometers that we've seen in the last, year or two.